Well, I'm joined now by Jameel Ahmad, who is the Chief Analyst at GTC and a global markets commentator. Jameel, thank you very much indeed for joining us. As we were just saying in the intro there, Saudi Arabia's GDP grew 4.5% last year. Just wondering what you read into that.
Well, when you consider that the world economy was expected to grow somewhere around 3.2% for 2025, you clearly see an outperformance there from Saudi Arabia. But if you look deeper into details, you actually see that non-oil growth contributed to more than half of the GDP. So this showed that the Saudi Arabian economy is definitely experiencing some sort of evolution and kicking into a higher gear as we head into the final 5 years of the 2030 vision. And if you look at 2026, we're still expecting somewhat the same trends. You have a world economy that's expected to grow somewhere around 3% for this year. So actually a global economy is expected to slow in 2026 compared to 2025. But Saudi Arabia's GDP is expected to range somewhere between 4.3% if you look at the World Bank estimates, and Standard Chartered come out earlier in 2026 expecting 4.5%. So we're still expecting an outperformance by Saudi Arabia, and we're also expecting an outperformance from the GCC region. But overall, the global economy is actually not looking too good. So when you see growth at these numbers for Saudi Arabia, it's very much an outlier.
Okay, and the latest figures from the Ministry of Tourism sounding very promising indeed, Jameel. Tell us about those.
So on a headline, for the first time, Saudi Arabia did reach the top 10 global destinations for tourism. And in 2025, we saw more than 120 million visitors, certainly some for international conferences and events, but more than 30 million of them were actually for tourist purposes. And in fact, I was in Riyadh just 1 week ago, and I was very much surprised by how much transformational change we've seen in Saudi Arabia over just a couple of months, because I've actually been to Saudi Arabia 3 or 4 times since the end of 2024, but I definitely did see a lot of change from my first visit in 2026, and clearly more is expected to be the same as we head into further towards 2030.
Okay, now for you and for anyone who works with global markets, it's been a pretty busy start to the year. We've seen some pretty choppy sessions out there, haven't we?
We certainly have, and it's been a very busy 2026 overall. I think if you're looking at the markets this week, you've seen selling across the board, and it looks like some breakups ahead of Valentine's Day or something. But essentially what we're seeing take place is the S&P 500 is having its worst week of the year. And if you look at the NASDAQ, we've not had a week as bad as this since the Trump tariff week of April 2025. Also, we're seeing a lot of volatility across cryptocurrencies, Bitcoin, gold, silver, and the US dollar last week fell to its lowest level in around 4 years. That might actually help the region of Saudi Arabia, because currencies pegged to the dollar essentially encourages more investment into the local economy. But overall for 2026, we're not seeing volatility slow down at all. And it looks like a lot of the policy uncertainty that comes from Washington, specifically when it comes to trade tariffs and so forth, that seems to be promoting a lot of volatility. And we do expect for 2026 to remain very busy.
Yeah, you mentioned gold there. I mean, we've been talking about it on this channel quite a bit the last few days. I mean, the price has been doing some extraordinary things, hasn't it? We've seen record highs, record losses in one day of trading. I mean, what's going on?
These are generational moves in gold. Last Friday, we saw the deepest falls in gold since 1980. And this week alone, we've seen swings from 4,400 US dollars to this interview. We've got gold nearing close to 5,000 US dollars. Investors are certainly diversifying their portfolios, and we're seeing a lot of weakness towards the US dollar and a lot of withholding those holdings in the US dollar as well. So I think investors are looking more towards gold. But even though we've never seen gold at 5,000 US dollars this time in history, I do think it's overvalued, but at the same time, a lot of those themes that have attracted investors towards safe havens, such as broad economic uncertainty, what happens with the Trump administration not being able to plan ahead when it comes to tariffs and so forth. And also you've got a lot of pressure on the US Central Bank to continue to cut interest rates. Historically, that's a very good signal for gold prices. And I actually do think that it wouldn't surprise me if gold prices do try to get their head back above 5,000 US dollars and potentially stay there.
All right, we really appreciate you sharing that with us. Thank you very much indeed, Jameel Ahmad, Chief Analyst at GTC and Global Markets Commentator. Thanks for your time.